Okay, this is a public hearing for the Village of Round Lake Beach, December 11th, 2017, I'm sorry. The time is 6:56 PM. Please call the roll.
Trustee Husk.
Here.
Trustee Valdez. Trustee Wallace.
Here.
Trustee Butler.
Here.
Trustee Nichols.
Here.
Mayor Hill.
Okay. Are there any questions about the agenda tonight? If not, can I have a motion and approval?
So moved.
Second.
All in favor?
Aye.
Okay, moving on to business, 2017 tax levy. Mr. Boyso.
Okay, thank you, Mayor Pro Temp and the Village Board. So the purpose of today's meeting is to go over the property tax levy and go through the hearing itself. So this was discussed during the November 20th Finance Committee. And today's agenda, what we'll look at is the economic environment of the state of Illinois, some of the local financial challenges, and then we'll dig into the 2017 proposed tax levy, and then we'll open up the room for questions. The first thing is the economic environment for the state of Illinois. One of the things that has been highlighted is the list of bills that remain unpaid by the state. And so right now, that as of last time when I checked, there was about $9 billion worth of bills that were unpaid. And keep in mind that this was reduced with the issuance of $6 billion in debt or general obligation debt because of the lower interest rate. So if that bond had not been issued by the state, we would be talking about $15 billion right now. The other thing is that's still floating out there is the property tax freeze, and which would include home rule communities such as the Village. And then one of the new things that came up, or that they came up with this year, was the 2% service fee or administration fee on the sales tax that the state collects and then sends over to the municipalities. So in effect, that's another state tax imposed on municipalities when they remit those sales tax revenues. The other thing is when we talk about issuing debt or general obligation bonds for the Village, one of the things that we look at is which environment the environment that we are operating under. And so what you look at here is the rating that Moody's has assigned to basically all the states within the Union. And so AAA rating is the best rating you can get. And then you can see that in highlighting in yellow are the states that border Illinois. And 3 of the 5 have AAA rating. Then we have another one, AA1 and AA2. And then you look at the state of Illinois kind of to your far right. And that's just one notch above junk status. So what that basically means is that whenever we go out to the markets and look for financing options, there is a percentage that gets built into the interest rate that we pay because of where we are. So it's the worst rated state by Moody's. And this was pulled up as of January of 2017. So again, they continue to look at the outlook for the state of Illinois when it comes to the ratings. A local challenge that we're looking at is the pension cost, and that is just the direct cost that we're paying into the pension right now. So it doesn't take into account the pension liability for the next 20, 35 years. So this is just looking at what we levy for during every budget year. So this year we're looking at $1,438,401 to cover these or budget year fiscal year 2019 levy pensions that are required by the village. So again, you're looking at 1 year snapshot here. EAV, or the value of the property within the village, has decreased by 25% since 2008. We are looking at a positive trend here, which is going back up. However, 25% is a large decrease in value. Another challenge that we have is looking at replacement of or facility replacement. So this slide here, we're looking at if we were to budget for everything that we should have replaced that it's in critical condition over the last couple of years, we were looking at budgeting $872,855. If we were looking at depreciation costs, we're looking at budgeting $107,438. And then looking forward to the next 5 fiscal years, if we were to meet all the critical items that are required to be replaced, we would be looking at spending or budgeting $3,400,590. So making sure that we have a sustainable employee base, we continue to talk about this idea that we can support 77 full-time equivalent employees, and by that meaning average salary increases of 2.5%. We talked about health insurance. In fact, we'll talk about it or one of the items on the board tonight is the health insurance cost. And making some changes, we're keeping it at just under 9% increase. But if we were to keep the same plan, we were talking about 15, 16% increases. And then same thing with looking at different options for workers' compensation and also general liability. So how the village is responding to these, staff is looking into capital planning. So we talked about during the Public Works Committee meetings, we talked about fiscal year 2019 and what we needed to budget for. Not only that, but also looking forward to the next 10 years and making sure that we're planning that accordingly. Same thing with the sustainable employee base, making sure that we're using public-private partnerships, using the technology that we have in place and making sure that the maximum use of it. And then also looking at partnerships with non-for-profits to look at grants and working with property owners to ensure code compliance, as that has a lot to do with value of property within the village. So when we look at the 2017 proposed tax levy, there are a couple of components here, or 4 components. One of them is the police pension, which we talked about. This is the actuarial state recommendation, so that's $1,195,695. And then we look at liability insurance, $365,000, IMRF, $150,000, corporate, $840,456, and then finally police protection, $97,130. So when you look at those 5 different components, the total tax levy that's being proposed here is $2,648,281. How does that compare to the 2016 levy? So the 2016 levy was $2,571,140. The rate at that time was 0.807%. Based on the estimates of value of property increasing by 4% and the levy being increased by 3%, the total levy amount is $2,648,281, or a rate of 0.799%, so less than 1%. The impact on a average home value here, if it does increase by 4%, we're talking about going from $138,240 to $143,770. And so the property tax bill for the village's portion would go from $372 to $383, or an increase of $11. If we look at the other scenario, which is the Census Bureau, like medium home value is $150,000 within the village. So the property tax bill would go from $403 to $416, or an increase of $13. Those are just two different ways of looking at the impact of the tax increase. Again, these are the assumptions that we're using for these numbers. We're assuming, or the assumption that's being used, of 4% in property values increases. The inflationary rate that we're using at the state level, is 2.1%. So if we were subject to it, that would be the maximum rate that it could be increased. So that normally applies to non-home rule communities. Projected 2017 EAV would be 331,398,670. Again, that would be an increase of 4% from 2016, and then the rate would go from 0.807 to 0.799. The rate breakdown, we like to take a look at these for a property that is covered by, say, Round Lake Area School District 116, if the property is all within that district. As we all know, there might be properties can fall within 3 different districts, including Lake Villa, Grace Lake. So this one looks at only Round Lake Area School District 116. So if that was the case, out of every dollar that is paid in property tax, 67 cents would go to the school district. 7 cents would go to the fire district, 6 cents would go to the park district, and 6 cents would go to the village, and then it would be broken down by the library, Lake County, and then other CLC or College of Lake County, and then other taxing districts. Again, there is a disclosure here. This would be the total rate of 14.28%. This was the 2016 effective tax rate. If you were looking at a property within that falls under the Grace Lake School District and District 127, that rate is 15.02. If you're looking at Lake Villa and Grace Lake, then you're talking about 14.75. So just a point of clarification there. As a total, the percentage, so when you divide that, the village's rate among all the other taxing districts, we're talking about 5.65% of the total tax. It's village's property tax collection. So with that, are there any questions on the tax levy? Thank you.
Thank you for that presentation, Kevin. Are there any questions by the board? By the public? Okay. Can I have a motion and a second to adjourn the meeting?
So moved.
Second.
All in favor?
Aye.
Aye.
We are adjourned. Our regular board meeting will start in just a little bit.